Well, hello, YouTube. Happy Friday. Hello, Twitter. Hello, X. I cannot call it X. I cannot call it X. I'm getting used to saying the Gulf of America, but I'm not getting used to saying X yet. All right. Well, I'll keep working on it. Jackson, come here, buddy. Come here. Get out from under the desk, please. All right. Well, Charles is in the house. Hey, Charles, thanks for being here. It looks like Charles got out of a position early, or not early, for a profit, and I was happy to see that. All right, let's share the screen to see what the heck's going on. I was just looking at something. I'm sorry, I just spaced out for a second. Look at this. I just saw a new feature, and I'll test it out later. I just saw a new feature in StreamYard that looks really cool. I'll show it to you guys some other time, or you guys will know because I use it. Okay, here we go. Did a really good new video today. It hasn't been released yet, but it's all recorded. I just have to make the thumbnail. But you guys are gonna like it. Oh, here it is. I got too many windows open. I gotta shut that. Gotta shut that. Gotta shut that. All right. You guys have everyone's already seen the market, right? Probably blocks is up, what, 11%? It's up 1.3 after hours. That's good. Let's look at ULTI, as in Rex, as in Rex's version, or that's ULTY. ULTI, Rex's Income Max Option Strategy fund was up 7.5%, and it's up 0.5% after hours. Have ULTY, everyone's favorite from Yield Max, was up 3.94%. That's actually amazing. You know, that's it's good. It's better than expected. So what's Alti based on? The NASDAQ? Kind of. Okay, the NASDAQ was up too. Alti's also kind of based on the Russell. I mean, not really, but has smaller stocks in there. What was the Russell up? The Russell was up about 3.59, so, I mean, but in other words, the Alti, ULTY, caught all the upside of what it's based on. Now, it's kind of has some Bitcoin stuff in there, but not as much as it used to. And so it's probably more fair to compare it to the Russell or the NASDAQ now. So good day. It outperformed the NASDAQ on the way up. It also, let's see how it did against K-Yield from Curve. K-Yield was up 5.84%. Now, K-Yield's down after hours a little bit, but man, that's nice. Really nice to see. I'm glad to see K-Yield up. So let's check some other ones out. Let's check out, so we check out the other divas. ISSB is now a diva, and it's acting like a diva. If that's not a chart pattern like a diva, that's the diva chart pattern right there. I mean, I'm trying to get it, straight down. Anyway, it's definitely acting like a diva. Now, granted, it's bouncing today. It's up 12.21. So that's the income stack product that is based on stocks and Bitcoin. Then we have the other income stack product from Quantify Funds that is based on Bitcoin and gold. ISBG also has all the marks of a diva. Definitely has the diva chart pattern. But anyway, that's good to see. It's bouncing and it's up in post-market trading. So let's look at old BITK. Now this is my own diva, but it's I don't know why it's not. Why isn't this one in the divas? This one ought to be in the divas, to be honest. But I think I want to compare the divas, just stock funds for the divas, just equities. It'd be unfair to compare this, but it has the other hallmarks of a diva. BITK has every hallmark of a diva. So especially lately, but it was up 10.5 today. So we will take that. Now, these guys don't use leverage, but they're uncapped at night. So let's look at Let's look at another fund that you guys all like, probably a lot more, is the Neos. And that one was up 10.19. Good job, BITK. You beat Neos. I'm probably dumping BITK, though. I just haven't yet. If we get another day of a rally, if I get another chance, it's gone. That thing is gone. I'm not mad at it. It's only 5% of my portfolio. I'm mad at myself, or I was an ill-timed investment. But anyway, ill-timed investment. It's doing what it's supposed to. I don't want to encourage other people. I mean, it's doing exactly what it's supposed to, but you have to understand what it does. It's uncapped tonight, so that means it profits off a bullish gap. Well, how do bullish gaps happen? Well, at night. They happen in up markets. Right here we have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 bullish gaps and 10 when the market was going up, 1 bearish gap. So, I mean, 10 times out of 11, the strategy helps you back here. Well, what happens when the market goes the other way? Which way does the market move at night? Typically. I mean, and you have some giant gap. So anyway, it's been, that's one reason why BITK has been under pressure lately, because it is uncovered at night, which is awesome on the way up, and it is miserable on the way down. So let's just run BITK against the Neos one, and I would expect BITK is lower, drop faster because of the uncapped at night. And we'll make them both a line chart so we can eyeball it. And yes, just like I said. Oh no, not like I said. Yeah, that total's not that bad after all. I mean, that total strategy, it's beating BTCI, and everyone loves Neos. Wow. Let's run it against old XBTY. I know you guys like XBTY, and I'm just totally joking. Well, we'll put it in anyway, though, just to see. But I don't think XBTY is a real popular one, is it? Oh gosh. XBT, is it XBTY? Yeah, XBooty. Same price scale. And give me another name. Give me another name. I'll put one that you guys do like up there. If somebody wants to give me a name, I'll just make one up. I mean, we could do BCCC. What's a really good crypto one? What's the best crypto one? Well, we'll do BCCC. All right. So anyway, we have a couple of crypto ones to look at. And look, that Neos one's the worst of any of them. I mean, as far as catching downside. And guess what? I bet it pays less yield. I bet you it does. I bet you it does. Because as you guys know, the yield acts as a buffer. It's not a hedge, but it is a buffer. So you have these ones that pay the giant yield. Ironically, they do better on the way down sometimes. Like the yield max ones will do better on the way down than a curve, even though a curve may do better overall. So oftentimes. Anyway, that's the kind of Neo situation, because that's, let me make sure. Oh, I'm sorry. No, Neos is yellow. Neos is yellow, and yellow is actually, I'm sorry, Neos is yellow. Which one's doing poorly? Maybe this one's doing, maybe mine's the one doing poorly. Yeah, okay. Oh gosh, okay. Well, that's what we would expect, surely enough, because that didn't make sense. BITK is down the most, but it's uncovered tonight. That totally makes sense. Especially, look, it wasn't doing that bad before this last just straight drop, but that straight drop had like 3 nighttime gaps that were huge. So of course BITK is down the most. Then all the other ones are about the same. You could see generally the one that's kind of been doing the best the whole way away was BCCC from Global X. If you kind of look at it, For a while, BTCI was doing really well. And for a while, BITK, when the market was going up, BITK, 1, 2, 3, whatever. But then when the market drops, it cratered. All right, so that's that. What are you guys up to today? What if you guys want to talk about anything? We can darn sure talk about it. There's a lot of comments, probably too many for me to read, so I'll just keep going with this. All right. Well, we looked at the market. Let's look at the divas, and we'll see how look. Oh, that's a heck of a day. That's the best day we've had. Look at that. I love visual stuff. This was the best day we'd ever had. Where blocks was up 10, and just by eyeballing it, and the rest of the bunch was, up, I don't know, 3 or 4 basically. Well, blocks is up 10, ULT or LFGY is up 9.4, ULTI from Rex is or blocks up 11 or 12, ULTI is up 10, and the rest of the crowd's up 5, 4, 6, 3. Even old WPay was up. Well, that is certainly good to see. We can look at the rolling total return, and we still only have SPY and Chippy in positive territory. Chippy's not really a diva. It performs too well to be a diva. If Chippy needs to start going down more, and then we can become a diva. But it's it's an understudy. It's in here for comparison purposes, and it's a tough comparison. QLDY also not a diva. It's in here for comparison purposes. It probably goes up too much to be a diva. It's too good to be a diva. The divas are the one. I'm just joking. The divas will do great in an extended bull market. It'll leave all these other ones in the dust. I mean, they will. But anyway, who knows what will happen again. All right, GPTY minus 11, K yield minus 12. That K yield's definitely a diva. ULTY minus 17 cents. And think about this. ULTY has been better to own than either blocks or ULTI from Rex. As much as people love X funds and Rex and everything, if you would have bought ULTI on the day it came out or bought ULTY, you actually do better on ULTY just because the market pulled back. Like I always say, yield max is actually safer on the way down, just more dangerous on the way up. Well, but man, blocks and ULTI in an extended bull run. Think about this. We've had 3 months where the asset they track is down 30%, and they're both down 30% too. So if the asset they tracked, and I'm just including Bitcoin is basically the asset that ULTI tracks, or meme economy, whatever. So, but what do you think would happen? Like last summer when Bitcoin was up, like 50% last summer or something. What do you think would have happened to these? I mean, my Lord, these things would have been the funds of the year because they would have got up, if they were around back then, they would have got so far ahead. I think the blocks would have still, even after the pullback, because they just get out so far ahead is the strategy with these guys. All right, so let's look at, let's see, active. I wondered if I had anything in here to show you guys. 3 days, not really. Expired or closed. When the market was dropping, all these Tuttle put ladder and Tuttle bearish hedges were doing great, Wednesday, Thursday, but then they all lost money today. All right, so let's look at stocktools.app. Oh, did anyone see? I did another hedging video today. Did anyone else sell the rip in? Did anyone else sell the rip? Did anyone else get short IBIT somehow? I did a trade in IBIT today. I'll show you guys in a second. But Bitcoin did a classic. There's a classic setup. I'm probably going to lose just like that. I did a trade yesterday and I lost. But I caught some downside on Wednesday and Thursday. But then I lost the money that I made Wednesday, Thursday, yesterday. So back to even, but or back to 1-1. I'm actually under. I lost a little bit more than I made, but I am going to get it back next week. And I'll show you how in just a second. But I'm not. I'm just having some fun. Just having some fun. Nothing serious. Okay. All righty. Let's look and see who the fund of the week was. Who do you guys think? Is it Murney? It's got to be Misty, right? Or MST based, strategy based. I don't know though, but strategy dropped so much the first 4 days, and maybe even with the huge rally, it may not. I don't know. We'll see. Fund of the week. I mean, we'll see. It just takes a second. It just takes a second. Hey, Mayor, how you doing? We got Z Bikerman, BR's in the house. Yeah, Marcus. Okay, that's the video I shot. So I made that Patreon. Thank you for saying you enjoyed it. I appreciate it. I've been working really hard on the video. I made that video. I made that Patreon, and then I used the Patreon to shoot a video. I hit upload, but then usually what I do is I publish the video on the Patreon at the same time. But I figured it doesn't matter. You know, you get a sneak peek. There's going to be a video that goes with that, and the video actually makes some conclusions that paper doesn't make. Because I sit there and kind of go through the paper live, not really live. I read it, I kind of skim it once, but I kind of go through the thing live as I'm recording it and react to it. And I pulled up some comparisons at the end. Watch for the video. I mean, it'll be out like at 7 tonight. I'm going to get out of here and which prime time? Yeah, 7 o'clock or 6 o'clock or something. But anyway, I mean, you already know kind of how it ends. But yeah, that case buy is really impressive. Let's just say that. I was surprised. I mean, because I was surprised at how impressive it was. Didi, what do you think? Okay, Didi says, what do you think about the auto callables backs? They seem complicated and not great. Okay, what do you mean on the not great part? A lot of people are really happy with them, but they have different people have different needs. Are they not catching enough upside for you? Are they going down more than you thought? Do they not pay enough? Give me another hint. Give me another hint into into the not great part. But I don't have any myself, but I've been tempted to get some. I don't know if you have a barrier fund, but it's very similar to a buffer fund or a barrier fund like SBAR, where you can't really lose money until where you have a big head start on the market. It has a similar mechanism. But anyway, we'll see. I bet you put some more stuff in here. So. Not everyone. I mean, like I'm happy with. I've been happy with things that you guys hate, and you guys are happy with stuff that I don't want. So I mean, everyone has different needs, right? All right. Charles is saying he had 8% return on account since Friday last week. That's nice. Yeah. Well, yeah, because that. Yeah, isn't it great when premium's elevated, and yeah, it gives you a little tailwind to selling options. One thing you can count on is you can count on Norman being here from the West Coast on a Friday afternoon. You can definitely count on that. How pretty is it on the West Coast, Norman? I bet it's not as pretty as it is here. Today is gorgeous. Spring is here in Austin. It is absolutely gorgeous. Where's the temperature? Well, I know where. Okay, there it is. What there's right there. 79 degrees. 79 degrees. It could be 83 tomorrow. Low of 47. It's California weather. I went outside last night. It's chilly but crisp. It smells good. It's just it's about 50 and kind of chilly, and then then it's not super hot, but the sun's warm, but the air's cold during the day. I love it. I love it. So Skeptic is saying that. Are you being serious? Because BR, I thought BR liked those. I thought you liked the auto callables. I think maybe BR's being. I think maybe BR's being sarcastic. Yeah, okay, that's what I figured. Max has Mayor has a question for me. It seems odd to me. Okay, well, good question. We can always we can have a recount. The max factor, the way it does that, the stable dex factor, the stability factor, looks at the 90-day standard deviation. It is the 90-day standard deviation. So I mean, yeah, but I get you. But there, maybe the spreadsheet could have had a bad number. I mean, I'm not saying. Let's look at let's do a little. We can do a little investigation. We can do a little bit. Let me just first kind of look at. Let's just run. Let me just kind of eyeball SBAR. Given its performance lately, yeah. Okay. Let's just eyeball SBAR versus the market, and let me just kind of eyeball it. Yeah, but it's super stable though. Stable means it doesn't oscillate much. It doesn't. Stability is not necessarily good or not necessarily bad. It's not a qualitative. It's not a qualitative judgment. It's a quantitative judgment. Stable. It doesn't go up that much, or that, or down that much. That can be good. It can be bad. So yeah, performance. I'll agree with you on performance. Who else was it running against? I mean, it could have been an error or something. I mean, usually when something like that happens, or when there's something that looks jacked up, I try to catch it and make one of the other ones editor's choice or something I don't agree with. But I mean, I think that's probably the only good thing. Not the only good thing. I think that's the one thing you could definitely say about SBAR is it's stable. Here's another thing I always say. An ETF can be too stable. Stock can be too stable. It can be so stable it never goes anywhere. So it's just the fact that it's the most stable doesn't necessarily mean it's the best. But it does, to me, it does indicate a degree of less risk. I'm just trying to use the stability as a measure of risk. If you have one fund that's up 10% one day and down 10% the other day routinely, another fund that swings in a 1% range, the one that swings in a 1% range is more stable. The one that's up or down 10% might be beating it, but I'm just trying to measure kind of that kind of stuff. All right, so you sold Iron Condor on SPX this morning, closed at 15 minutes on 6.6. That's awesome. So when you sell it first thing this morning, the market ripped. I'm surprised you didn't get your calls run through, but maybe you did it off balance, or the other thing is maybe the calls were getting ready to get run through, but so much money came out of the puts that you're able to close the thing, make 6.6%. It could basically do a little swing trade scalp, pull some theta decay off. That's wonderful. I like that, DD. Sounds to me like you're a premium degenerate, or a theta degenerate. We ought to call you Theta Hound or something. All right, yeah, BTCI was on there, so I got that one on there. Okay, SBAR still has share price fluctuations, absolutely. But when I'm comparing 200 funds to each other, and the stable dex just compares the magnitude of the share price fluctuations. Hey, William, good afternoon. Yield Boost will probably figure out a way to come out with a 200% yield on an auto callable. Oh gosh, yeah. I mean, probably. One of the biggest investor mistakes is I'll wait until it sells off more to buy, and then it's already going up. Good one. Charles, good advice. Brad says, I think they're doing some on Tesla. Oh, a Tesla auto callable. Well, that ought to boost the yield a little bit, right? And NVIDIA, low yield may not pay. I don't get it. Yeah. All right, Charles. Most fund managers are just advertising, selling calls for income yield. Can't prove the strategy. No, in fact, the strategy usually underperforms. Let's see. I bet those calls sold today, got capped. You should watch my video tonight on KSpy. KSpy is a covered call fund. Well, it's a buffer fund. Anyway, that wasn't capped today. And just watch my video. It's whatever. I think we talked about it on a live the other night. But yeah, that's the Achilles heel of that strategy. The underperformance, but the only reason people do these, of course, is because the income matters more to them than the outperformance, and that's why I always kind of try to steer older people to them, because I don't want a young person to get too heavy in these and cost themselves money down the line, whatever. When I say that, I'm not talking to you guys. I'm not talking to Skeptic or Charles, or you guys are like I always say, in the top probably 1% of, or top 2 or 3% of investors. you know, as far as experience goes. And you guys, if you want to, you know what you're doing. But I think there's some people out there that don't really, and they just, you know, and so for them, if you're young, just stay in growth. And then when you get older, you know, start selling some premium. But yeah, Charles is right. They don't outperform. Occasionally you might get one that does, but it's the exception and not the rule. All right. Well, I'm not going to answer that one, Charles. I don't know. I'm not a Bitcoin maxi. I just, but you'd never know it by the way I invest, would you? Anyway, dividend generator, coupon barrier, maturity barrier, I think one other. All right. Skeptic, the main function is to be a steady income during chop or flat markets. Tesla and NVIDIA won't move in such a way. Yeah, I agree with that. Yes, now Charles and I are on the same page on this. One of the most risky positions anyone can have is long stock. You have, I mean, people are always talking about unlimited downside or whatever. Or here, I'll tell you a risky position: go sell a put. I mean, it's the same thing as being long stock. It's a little bit less risky because you get a little bit of income up front, but you make that you have the same risk. You actually have a little bit more stock, a little bit. I think you even have a little bit more risk just selling a put because you're totally capped. You're capped over the put strike. But you get income in return for being capped. So, but I'd say just selling a put or buying stock, yes, because you have unlimited downside. You're naked. You're essentially naked. But now the other side to that is stock doesn't expire. I mean, the only reason people do that, even though it's kind of risky, because the stock represents ownership in a company, and you're investing in hopefully a growing economy and a growing income stream, and you know you have other things going on. But yeah, I would agree with that. One of the most risky is long stock. Yeah, it just, but the less risky is ETFs, much less little. Yeah. I mean, because an ETF usually has 100 long stocks or 200 long stocks. So yeah, in all fairness, auto-callable Sean, yeah, I don't have a problem with them, Marcus. But not, like I say, maybe they aren't for everybody. Do auto-callable ETFs offer less maintenance margin at a brokerage? That's a good question. Marcus, know the answer to that? Well, here, I'm going to get in the middle of this. I mean, every time I look at CAIE, CAIQ, they're kind of new. So, I mean, not so much anymore. They always look pretty dang good to me, but I don't have any. And I mean, they may not be great if you need more yield, you know, but I mean, that one's beating the SPY. I don't know what else a person would want. I mean, that's, you know, I mean, or it's beating the SPY. Now it's only over, 6-7 months. But I mean, that's pretty dang good. Pretty dang good. Okay, now here's an example. The Zoom sometimes works and sometimes doesn't. I'm just trying to. Well, all I was trying to say is you could kind of see on these two, the blue line, oh no, never mind that. Never mind. It's too hard to see. All right. Yeah, 67 degrees. Well, 79 down here. But in any event, 67 in California is about the same as being 79 in Austin because, you guys got that ocean breeze. Now, Norman's there in the South Bay area of Los Angeles, which is arguably, a lot of people say, the very best area to live, the best part of Los Angeles. A lot of people, insiders, I've heard before, Manhattan Beach, Redondo Beach, that Malibu and those other things are in the movies and stuff, and you have a lot of traffic and tourists and stuff, but it just does not get any better from what I've heard. If you want to live next to the ocean, then Manhattan Beach. But we'll see if Norman agrees with that, concurs or not. But there's also, I mean, down there in Palos Verdes, and there's some beautiful neighborhoods down there in the South Bay. Gorgeous neighborhoods. All right. Dividend generator. Waited till 10:30. Oh yeah, you waited till 10:30 for the theta scout. So you waited until the move stopped, or hopefully till the big. Yeah, then you're out in 20 minutes. That's great. Side note, guys, as far as not an auto callable, it's tracking barrier options. That's correct. I didn't mean to get people confused. I'm comparing it to CAIE because they have similar mechanisms. But yes, I shouldn't have, as far as a barrier option. So it's a different mechanism. So dividend. Okay, so what's the long-term looping? Oh, long-term. Well, he's not going to do it every day, though. DD knows how to do it. I mean, you do it like selectively, right? And I hear you. I just don't. I like to have to. I'm not big on condors. But I'll tell you what is a long-term winning strategy. You could do the same thing. Wait till 10:30, selling out of the money put spread, or selling out of the money put. Just because the reason that wins is because it doesn't get hurt when the market going up all the time hurts condors, you know. But I think that it is true, and I'll let Charles say. Charles knows it, has back tested way more stuff than I have, probably. But it is not selling a I don't know, an option, a 30 delta put on the SPY every day or the SPX every day. Does that not have an edge? I mean, in other words, you could also sell that. You're still bringing in income. You just aren't selling the other leg or spread, whatever. We'll see what Charles says. CAIE and CAIQ fluctuate way more than SBAR. That's what you're saying. Okay, I get where you're going. I get where you're going with that. I'd have to watch the show to see. Was I saying that? Did I give SBAR? Okay, let me watch this. Yes, absolutely. Correct. Of course. Yeah, they do fluctuate way more than SBAR. So SBAR has a higher stable dex. I made it kind of confusing. I mean, you want a high number because you want something more stable. Is AC2 in the max factor? Let's just go check. There it is right here, the new max factor. But we can actually, okay, main database. So this is the part that's really getting the better of me, this multi-touch situation. Gosh darn it. All right. Where is this? Come on. Okay. I think it is. I think down here at the bottom is where I put the new ones. And I think it's lined up to be in there, but we just have to see if it's eligible yet. AC2. AC2. I swear it's right. I've seen it when I scroll down here. Well, maybe not. So let's just do this. We could just put it in. But now that I'm over here, let's look at some more stable dexes, and I'll kind of show you. Maybe I can explain it better or something. And we'll check the numbers too. All right. All right, so when did AC2 come out? The computer will tell us it's in column C, September 25th. So October, November, December. Yes. That has been eligible for a while. I swear, I think it's already on here. Now it'll be on here twice. It's no big deal. And I swear to goodness, I thought I had that on here. Okay, well, that's great. Let's just say what it's done so far. I mean, so it's paid 56 cents in divvies. That's dividends. That's the yield. That's if you figure out 50, or that's the trailing 12-month. Or now that's how much dividends is paid in its life. The 6.04 extrapolates that number over 12 months and figures that it should be about a 6% payer at that pace. In the past 90 days, it's come from 25.34 to 25.48. So it's, that means its MAV is up 55%. So yeah, it's a good one. It'll be in there next time. I mean, so let's go to the stable dex. So let's get another. Let's do this. Okay. No, not okay. Gosh darn it. Why is this jacked up? X, Y, Z. And I don't know how to fix this, I guess. How do you get rid of a table? I hit clear formatting. Gosh darn it. Let me see if I can tell it. Okay, so stable decks. Let me try to explain a little bit because I thought this was pretty creative. I like this. I love this, but it's a different. So when somebody's talking about standard deviation or somebody's saying the vol of this asset, lower means it's steadier. On the stable decks, a higher number means it's steadier because the VIX or standard deviation is a measure of volatility. Mine's a measure of stability. So the most stable fund out there is Sirloin. Now, Sirloin is, let's do it this way. Wish there was a way to clear everything. At once. So Sirloin is, I never heard of this one before, but I heard Jay talk about it on a podcast. He used to do podcasts. I used to listen to him every week when I was first doing this. And it's senior loans. It's a senior loan deal, and they use it in wealth management. It's an alternative to bonds or something. All right. So and they like this. And it is fixed income. So let's see. Let's see if it's stable or not. I mean, this is the most stable one on my whole sheet. Well, let's see. So it dropped from 38.75 to 36.77. So it dropped $1 on $30. So it dropped 3% in April. You know, recently it's dropped 41 cents on 41%. So that's what stability looks like. And it doesn't mean it's necessarily good. I don't think, not necessarily good or bad. But let me show you what unstability looks like. So let's just do that, and let's do that just against the SPY. Not that the SPY is unstable, but it's less stable than a senior loan portfolio. I'm just trying to show for comparison purposes. Yeah, I mean, it's just that, so you guys get the idea. Andre, yes, Andre, you get it. Andre gets it. Okay, well, where's Andre? Is Andre? Oh yeah, Andre. I know Andre, of course. Andre Brown. Yeah, of course. Andre's New World Order. I got Andre. So 32 in Pennsylvania needs to be 72. All right, KIQQ has my attention, and I made a video on it today. Yeah, like I said, I think KSPI is better. We only have 1 month of KIQQ, and KIQQ is real interesting too, and it pays a yield. So better is the wrong word. I think KSPI is more interesting. All right. So, and Andre says he's not expecting any capital gains from these in 5 years. He's just, he says they'll probably be the same price as now. He's trying to turn it into a bond. I mean, it's an auto callable bond. It's attached to an equity, but it's, yeah. All right. So, but I don't know about the same price 5 years from now. That's an awful lot to ask. I would hope it might be up 20% or something. It could be way underperforming the market, but it depends on if the 5 years is good. If we have a 5 years where we make, well, I mean, I would hope it might be up 10% or something, but if we have a 5 years where we make, 10%, we make, 50% in 5 years or 40% in 5 years, I might expect that to be up 10. So, and if we had a really bad 5 years, it might be down a little bit. I don't know, just because people, aren't as positive on the market. But yeah, they're supposed to pay out income without sacrificing NAV stability at all times. The risk is when they have a legitimate bear market. Yeah, there's no such thing as you're just going to prevent all NAV stability. At some point, they're going to lose on one of those bonds. It won't even, it's not, that's not even what it's going to take. Them losing on the bond is not what it's going to take to decrease the NAVs, to make the NAV go down whenever we have a serious bear market. Like I think an April situation would knock some market cap off those. Were those around in April? But especially a more serious situation would you know, it should bounce right back. But when it starts getting, as it starts getting closer to the barrier, it wasn't around in April, but let me try to illustrate it. See, it does trade with the market. I mean, look at that. It's just, it does go down when the market goes down. There's no such thing as no NAV decay. It's just less, or whatever. I know you guys know that, but it's just less. There's no such thing as it's only going to make a profit. It's only going to go up. That's what there's no such thing is. But let's get these starting on the same date and see on the green end. Let's get all these right there. So CAIE. Oh yeah, see, okay, CAIE and SPY, yeah, they definitely trade together. I mean, but when SPY's down, it pulls it down with it. Now, but how volatile do you think CAIE is? See, we can measure that the same way we measure this one. So this sirloin's the most unvolatile. It's the stablest, in other words. I bet this one, just eyeballing it, it looks a little bit less stable than the SPY. So the SPY stable dex by definition is 1 because it's indexed to the SPY. So I'm saying this is 110. So let's go back to the new max factor and let's just, let's line them up in alphabetical order so we have an easy time finding it. There it is, CAIE. So their stable dex is 118. I said 110, but it's definitely more volatile than the market. Now I just really want to make this point on the stable dex more. So the most stable funds out there, Sirloin's number 1. Okay, it's number 2 is HYGW, corporate bonds, almost 4 times as stable or 4 times less volatile than the SPY. And then we have Bondi or whatever, based on bonds. Then we have FIAX, FIAX. Then we have Buy W. That's the most stable covered call fund out there. And then XYLD is the second most stable. Then we have YYY. I know a lot of you guys like YYY, right? And then we have SPUT. Now those are market specials right there. SPUT is, and FIAX. So it doesn't mean these are the best funds out there, but look at JEPI. They're the ones that are going to keep you awake less at night. TLTP, SPY-I, TLTW, TLTI, FTHI, First Trust Covered Call Fund, Stretch, SBAR, CanQ, CanQ is a hedged equity fund with unconstrained upside. It pays about 5% though, but it's a hedged equity income fund with unconstrained upside. But it doesn't get it's not 100%. I mean, it's uncapped upside, but it's not 1-for-1 upside because there's no free money. You can't be uncapped and have 1-for-1 and pay a yield. That's not possible. Then you have MLPD. A lot of you guys have been using that or those types of things to de-risk. GPIX from Goldman, absolutely. RSPA, CEFS. So the whole idea that I was trying to do with this, like I say, it's not a qualitative measurement. It's a quantitative measurement, but the quantity I was trying to, or I guess no, it's not quantitative, it's qualitative. The quality that I'm looking for is safety. Now, it doesn't mean that's just the factor in that equation that shows us safety. And the reason I think that's important is because when you go to allocate your high yield portfolio, and you're saying, okay, I want 20% blocks and 20% alti and 5%, whatever. When you go to allocate your portfolio, if you have too big of a position in too volatile of a stock versus your other ones, the one that you have too big a position in that's too volatile, and who's to say what too volatile is? It's too volatile for you. You're the one that has to get up and look at your phone every day and you go, holy cow, what's going on? You know, so that's the thing. To me, a fund that's less volatile is more valuable. You have two funds, a fund that is less valuable, but they both have a 10% total return and they both pay a 15% dividend. But one of them has half the volatility of the other. The one that has half the volatility is more valuable to allocate. You can in your portfolio, in my opinion, and that's what that's what the max factor is trying to help us do. But I call it the max factor, not the skeptic factor, the mayor factor, or the Andre factor. It may not be for everyone, but I'm just trying to help you guys out. Mayor says, I personally think that in our age of money printing, there's no 5-year bear market. Maybe not. Market's choppy most of the time. So wonder also if we don't have, or have you noticed, or here's a theory I have. I think now traders are more sophisticated. Hedge funds are more sophisticated. You have regular people down the street that are looking at the VIVIX and thinking about second order derivatives. And you have people you have retail traders that are out there trading like a freaking hedge fund nowadays. That didn't used to happen. For one thing, you couldn't do it because of commissions and because mainly of commissions. Well, but also there wasn't as many options available. You didn't have ODTEs. You didn't have as much liquidity. So nowadays you have more traders with more knowledge and more commissions. Whenever the market looks bad, like it did in whenever, people see it coming from a mile away. Professionals see it and they're hedged. I think that I think that less stuff catches the market by surprise than in the old days. And I think that traders are less likely to be caught off guard. But I don't think it would necessarily mean we couldn't have a bear market again. I get the money printing part of it, but maybe the excessive money printing will have another effect. And at some point, we will hit a situation like 2000 where we get a whole sector that's so overvalued it crashes. And I could see, even because printing money doesn't necessarily bail you out of a crash, it might exasperate it. But anyway, so I'm saying I unfortunately don't think we're just through with bear markets forever, but I do think I hope anyway, that we're through with such wild markets where they surprise you so much. And the reason that's good is because as option premium sellers, like most of you guys are, it makes it a lot easier for an option premium seller. Even as recently as 2017, 2018, the market was miserable for premium sellers because there wasn't as much knowledge. Commissions weren't free, and Trump was tweeting, and the market would drop 1,000 points at night. I'm just saying it was a real rough time. But now, 8 years later, free commissions, more sophistication, people understand how to hedge more. People are used to Trump now, and it's So I really think if you're a premium seller, that you really, you don't care if the market goes down just as long as it comes back. You know what I mean? You don't want it to go down. But anyway, that's my opinion on that matter. Basically, don't buy any auto callable for growth. They're for steady income. If they appreciate it, it's not because of the fund manager, it's just because of the market. Absolutely. And I'm going to add one more caveat to that. I'm going to say don't buy any high yield fund for growth. They're for income. Now, some of them do grow also, but it's a feature, or it's a benefit and not a feature. Or you guys know what I mean. It's a pleasant surprise. It's not necessarily, I think, something that you could count on. That's just me though. You see crashes almost immediately. Yeah, that's the other thing. Okay, so maybe that has to do with the money printing. I'm with you on what you're saying. There's definitely something different. I'm just trying to say, I think that's the pipes of the market, the way the market's plumbed with derivatives nowadays, and as sophisticated, not only sophisticated as retailers, but also think about in the age of AI. Who knows that these hedge funds don't have AI running? AI that we don't, that's not publicly available or something, and the AI can get them out of the way of pretty much everything. So I just think that the investors are more sophisticated nowadays. Now that's a compliment to all of us, because it's mainly the retail investors that are so sophisticated. So Andre agreed with that. Well, good. I like that I got agreement on that. I'm making sure that I didn't miss anything. What I was going to do, what I saw earlier that kind of freaked me out. Look at this. So if I do this, It says invite guests, but I was wondering, can I put that in the chat and then one of you guys could get on here and talk? Or I'm going to try it. I'm going to send this to Marcus. I want you to, or does anyone want to talk for a second? I just want to see if this works. Okay, well, I see. Copy. Oh, Gmail, email, or messenger. Okay, I thought I could just do it and put it right there. And if like we were having a conversation, I could put Mayor in here, send him an invite, he could talk, and then I guess I could kick him out and go on with the rest of the show later or whatever. But no, it's just to send you an email. I really would like to have you guys on or do a, or we'll maybe do it in Discord. We'll do a Discord meeting where we can all talk. All right, guys. Well, I'm gonna get out of here unless there's any other last minute questions, and I'm gonna go. I'm gonna take the dogs for a walk. It's still light and it's warm, and that's exactly what I'm gonna do. All right, guys. Well, I appreciate you all for being here. Now, remember, like I always say, it's not financial advice. It is for fun and entertainment only. If you'd like to support the station, you can always do so at paypal.me/maxconvexity, and that's always appreciated, especially between paychecks. And what else do I have for you? This is a cool new feature also. I'll start using this. Check this out. I can put this up, or yeah, so I put this up. There's a little timer that says 10 seconds. I think that means it comes down automatically after 10 seconds, which is good because I always forget to take it down. And sometimes you start talking and it's blocking part of the screen. Yeah, that's wonderful. And I don't want no finance. That doesn't have to be up there all the time. That can go. Oh, so anyway, that's a really cool feature also. All right. Well, I got you guys all caught up on the new StreamYard features. No, that's a good point. I don't think so, but I know retail sure wasn't. I mean, no, of course they were sophisticated, but I mean, the commissions for what I'm talking mainly about retail. I mean, yeah, I think retail's a lot more and a lot more prepared. In 2008, the VIX had just come out. There's instruments now that people use to hedge that like weren't available. Could have stopped the 87 crash, or it could have. In 87, maybe if people would have had VIX, who knows? But I think I'm mainly talking retail. And I'm also talking the massive liquidity, the tiny bid-ask spreads. I think there's less of a built-in edge for Wall Street. And I think that makes the market better. I just think, I think it's possible to have a bear market. But I definitely think it's possible. But I do think that's why I think the markets I just think people don't seem to get caught as offsides as much. When something happens, it's like, people seem to know about it and be prepared for the most part. People now, having said that, people were caught offsides by this Bitcoin move. Anyway, so what do I know? What do I know? But yeah, no, hedge funds have always been sophisticated. They have always been sophisticated. All right, guys. Well, thank you so much for being here. And I will talk to you guys tomorrow. All right, or I'll do a late night show tonight. We'll have a daily factor. And I'll tell you what, I'll do closed in fun Friday night as a favor to BR, and the rest of you guys will like closed in funds. We'll look at all the closed in funds tonight. Be here about 8 o'clock. All right, talk to you later.